In this episode of the AgeTech Podcast, I'm joined by Lyne Landry from AgeTech Capital to talk about investing in our longer lives, from AI-powered care to financial well-being. Stick around to discover fresh funding opportunities and the biggest gaps waiting for new AgeTech startups to fill. Lyne, welcome to the show.
Thank you so much, Karen, for having me. And I'm a big fan. So thank you for the work you're doing. It's really, really useful and insightful. So thank you.
Thank you. Thank you so much. So first of all, why don't we get started by just you telling us more about the fund? Like, what are the basics AgeTech founders who are listening or watching us need to know?
So AgeTech Capital, we're 3 partners. So myself, I have an M&A, private equity, and impact investing background. Alan McIntosh, that has a pure VC background, health tech and AI focus for the past 10 years. And Bruce Simpson, which was the head of McKinsey Canada, McKinsey Healthcare, and was also the one that started the venture studio for McKinsey. And he's focusing on the value creation and supporting our portfolio companies. We are based in Canada, invest in North America, but we also have an allocation for international companies and startups, focusing on Series A and B. So that is the fund that we're still fundraising for today. We've made 6 investments so far, but still continuing to fundraise. So that's the fund part of AgeTech Capital. We have also a very exciting platform in partnership with AARP based in the US, where we saw there was a huge gap at the seed level in terms of funding. And so we created a platform. If people know what AngelList is, we're recreating AngelList, but for AgeTech Capital, which is basically a marketplace between angel investors, family offices, and small corporate ventures wanting to invest in the age tech sector. And there's the 2 objectives. So it's bringing more capital at the seed stage, but it's also to sort of have an information angle to it to say, okay, here's the exciting world of AgeTech Capital. You can make market return and have impact at the same time. And so there's a bit of information to the wider investor ecosystem.
That's awesome. So currently you're able to invest from the seed through A rounds?
Yes. So A and B is through the fund, and then seed is on the platform. So we could invest via the platform, but mostly it would be SPVs created by angel investors, family offices, and small corporate ventures.
And what types of startups within the age tech realm are you looking for?
We are a software, AI, native AI, or a large part of the strategy revolves around AI in the 4 following verticals. So we have what we call connected living. And so we know a lot of people will have to stay at home and will have all of the smart home, but also community connecting. So that's in the connected living vertical. Then we have caregiving. So for professional and personal, so optimizing for caregivers, tools to make their work more efficient. And then we have what we call empowered health. And so how can we give back the power to the aging population through technology and be empowered in taking ownership of their health? And then we have financial well-being. It's the base of the pyramid. We're an impact fund. And so for us, we know that the base, if you're not financially secure, very hard to think about your health. And so we know 50% of the population is financially insecure. And so how do we help you better plan for your retirement or increase your income post-retirement or decumulate better post-retirement? So that's the last and fourth.
Awesome. So what do startups need to have in terms of milestones in order to qualify for the investor network and for the fund? And how do they apply for each? Is it the same funnel? If they apply to the investor network and they're too late, Will you funnel them through to the fund or vice versa?
Exactly. So seed level and pre-seed, you may apply if pre-seed, but I would say the sweet spot on the AgeTech Investor Network, which is a marketplace that we are managing with AARP, is what we look for is that if they've been incubated in a known accelerator, so that's one filtering criteria. The other filtering criteria is that if you're having traction or a very significant partnership with a distribution partner, and if you have clinical proof that your solution is actually working. And so these are the three sort of and founders experience. We have a selection committee for the AgeTech Investor Network. And so once you apply, you go through a selection committee, and then those who make it through the selection committee will be admitted on the platform. And then every month we showcase companies to a pitch event for the members of the platform. So that's the seed. If you're a seed, I mean, we'll get to know you through, and that's the magic about our partnership for AgeTech Capital, that we'll get to see the pipeline coming in through the platform. And then at Series A, hopefully we've known you for a year or two, and track your progress so we can invest in Series A and Series B.
Perfect. It sounds like incredibly beneficial for startups to get their seed round secured and then know that they have a good chance of getting funding for the later growth stages if they are successful in meeting their milestones.
Exactly.
What is the end goal? How big will the fund be eventually?
So we're raising $100 million fund, of which 50 million is the core fund, and then 50 is SPVs. Our investors, our LPs that have committed, wanted to have the opportunity to double down on specific investments. That's the market trend, I would say. And at the moment in the VC world, the direct investment in very niche area. And so we've put our $100 million fund into a 50 core and a 50 SPV opportunities for our investors.
And during this fundraising journey, how many of the LPs already knew what you were talking about and knew about the opportunity, and how many did you have to educate?
I think it's 100% educate. It's still an educational process. That's why with the partnership with AARP, we really wanted to have this educational piece added to the platform. So we raised the tide for all AgeTech investors. Common challenge is like, why do you need a dedicated fund for AgeTech that we get from our LPs? Why not just a health tech or a fintech? Having the lens of older adult and the challenges of that, the segments post 50 years old, we think, there's a distribution access, a communication piece, user experience piece, that once you have that lens makes it value creation more important as a VC. And in the 6 deals that we've done, Karen, like we saw health tech or fintech coming to us and saying, can we please, come on into the deal with us, because we see value in having someone that knows about those challenges and how to bring, that perspective. There's also different KPIs, I think, for AgeTech startups, usually higher cost of acquisition, but longer lifetime value. And so having that perspective brings something. And that's why when we created AgeTech Capital, we wanted to be 3 partners. We think the value creation bit is really important. Just deploying capital is one part of it, which is important, but we think the value creation part and the role we play with other VCs in raising the game for the AgeTech sector was really important for us.
Absolutely. So I wonder, you mentioned that the cost of acquisition for AgeTech startup is higher than it might be in other industries, but you also said that the lifetime value is higher. which I think is sort of counterintuitive when you're dealing with startups who sell to older adults and those who serve them.
Yeah, I mean, the retention rate is super high, and it's a very loyal customer. Once they're in for the long run. They're a bit higher touch in terms of customer service. So you do need to have, but this is why we think AI and AI agents will help bring down the costs of servicing this population. That's what we are seeing in the market and in the portfolio companies that we have, is that the churn is lower and the retention is higher.
And out of the 6 portfolio companies that you currently have, is that like the overarching trend in such a short time? You see that churn is lower than the benchmark in other industries?
Yeah, well, some of the companies have been, I mean, because we invested Series A and Series B, so some of them have been at this for at least 4, some 5. It takes a bit longer, I find, to get to Series A and Series B in the AgeTech sector. We have enough data to sort of look at the pattern if you want, but it is a trend, yes.
It's great to hear. I always like to hear about the counterintuitive learnings that people have in our ecosystem. So I wonder, what are some of the opportunities in AgeTech that you as a fund really want to invest in, but you haven't seen startups going after these opportunities at all?
I think everyone will tell you that the integration of all of the point solution is what we're looking for. Distributing this one solution into a senior living or at home is difficult because you have several solutions that wants to integrate into one point. And so having these platform that integrates all of these solutions is a very difficult thing to accomplish. And depending on the end, the B2B, so the client, so if it's a senior living, they get to decide how they integrate all of these solutions. And so we need to know very well the strategic plan of these distributors of solution. So we haven't seen that. So that's something we're always in the lookout. So that's one. It is inevitable when you look at the caregiver market that robotic will play a big role. We haven't seen the takeoff we wish robotic would have in the senior age tech sector. That's another one we keep a close eye on. The market adoption might not be there yet, but it is inevitable, like it will happen. So that's one. Our view is that there are amazing entrepreneurs, second-time founders, third-time founders. We see a lot of very interesting solutions. The adoption rate and the distribution channels, it's a bit of a trickle. And so I think it's not so much in the innovation part and the startup part that we see a shortage of, but more in the adoption. Anderson Horowitz actually did a podcast, super interesting podcast on health tech and where they think the big bang will be. And it's a B2C big bang they think they're betting on. Right now it's mostly B2B or B2G. The B2C market is a tough nut to crack still. But we do keep an eye on that. We do think at some point the B2C market will open up.
It is absolutely a tough nut to crack, and only a handful of startups have been successful at it and doing just B2C in our ecosystem. Yeah. But it's obviously something that it can be done because we have examples for successful startups.
Yeah.
I wonder, you mentioned that there is obviously no shortage in point solutions, but we don't really have any integrators in our ecosystem. Would you think that it would be valuable for any one startup to sort of be like the middleman startup to aggregate all of the solutions and to integrate them into all the various EHRs out there? So any senior living provider could basically contract with just this startup and know that everything the AgeTech ecosystem has to offer can plug seamlessly into their EHR and all they need to do is select which solutions they want?
It will happen. On the health side, Pointy Care is an example of that. Like they were able successfully, and I'm a proud Canadian to say it's a Canadian startup, and they were able to be that marketplace for other solutions to come in. More generally speaking, it's not an age tech company per se, but that playbook could be replicated for. We've been talking with large senior home players that are thinking on accelerating that and creating some sort of a integrator market. And so everyone's thinking about it. A lot of people are working on it. It's going to happen. And so, yes, the answer is it's inevitable that in 2-3 years from now, we're going to have probably some key integrator startup that will pop up as the leaders in the market. Yes.
Yeah, because I feel like part of the reason why so many providers don't adopt technology in the speed and velocity that they would have liked to is because they don't have the bandwidth to deal with it. I mean, they know that they have various needs, but just bringing all of these solutions in and aggregating all of this data is just too much for them to handle.
Yeah, you're absolutely right. I mean, when you think about it, it's teardrops now, because of different environments, integrating tech requires change of habits, training of professionals. That sector is going through some consolidation as well. Our forecast is in 3 years from now, all of that will be a little bit more stable and we'll see some integration. The teardrop will be more, I wouldn't say floodgate, but there will be an increase in flow for sure in adoption of technology.
Absolutely. So if you look into your crystal ball and try to predict what the ecosystem could look like 5, 10, or 20 years down the line, what do you imagine?
Our goal, and as an impact fund for us, is to increase the participation of older adults back into the society and to not have any roadblock to be able to do so. Meaning if they want to continue to work, they can work. If they want to engage as a volunteer, they have different ways of engaging. If it's just 1 hour a week, or if it's just full-time volunteering in their neighborhood. So it's going to be this massive marketplace of solution for older adults to really be empowered to live the way they want to live, to manage their health and their wealth the way they want to manage, all facilitated with technology that will be integrated in the current infrastructure. So right now we're kind of running with parallel system where tech is on one side and then the current infrastructure, and there's a little bit of an overlap. That overlap, hopefully in 20 years from now, will be complete, where technology will be an integral part of the infrastructure. And older adult will be in the driving seat and being empowered to manage their own life and how they want to grow older in a more self-directed way. They have more purpose, feel more alive. And that 30 extra years that they got through the science, they can enjoy it fully, financially, and with better health.
Sold. I'm sold on this vision. So that was actually my last question. And is there anything else that we didn't talk about that you would like to say? Any call to action to our audience?
Yeah. I think first and foremost, I'm really impressed by the quality of the founders out there dedicating their life and probably sacrificing a lot to be doing age tech companies. It's not sexy to be aging, and we don't want to think about it. We don't want to age. So to have the courage of creating a startup in the age tech sector is phenomenal. And so I want to express my gratitude to all of these founders. So that's the first thing. But I challenge all of us to change our culture and how we communicate, um, making aging fun, participative, exciting, and not this thing where it's like a burden and it's decreasing, but it's more something where I think some of Asian culture have that more, like sharing wisdom, sharing intergenerational learning. And so all of us together changing that narrative. And I think you, Karen, what you do, it plays a big role into this. So thank you.
Thank you. And yeah, we're all changing the narrative. I feel like we'll get there eventually. It's a slow process,
Yeah.
but we're definitely going in the right direction. Lyne, thank you
Yes.
so much
Agree.
for joining me on the show today. It was an absolute pleasure chatting with you and learning a little bit about AgeTech Capital. And I wish you lots and lots
Pleasure
of
is all mine.
success.
Thank you, Karen.
If you want to hear more about how dedicated AgeTech venture capital funds are shaping this ecosystem, check out my conversation with Abby Levy from Primetime Partners. I'll put the link right here. Until next time, stay humble, stay curious,